While the government has tons of resources, they can only allocate it in so many places. In a video I filmed last week touching about healthcare fraud, I mentioned how so much government resources are moving towards healthcare fraud. Additionally, there have been myriad investigations into payroll protection fraud. And that's what we're going to discuss in this video today. Sentencing outcomes, payroll protection fraud, the investment of time the government is making to get this process started or to get this show started. Let's refer to our trusted screen share by opening up by what a U.S. attorney has said about this payroll protection program fraud. For example, he said, stealing limited COVID relief funds is the very definition of stealing from the less fortunate. Every dollar that was stolen and extravagantly spent was one less dollar that went to a struggling business scrambling to meet its payroll obligations to employees. The Department of Justice and its partners will do everything in their power to investigate and prosecute those that would deign to steal those limited funds and stall national recovery efforts. So as a defendant or anyone traversing the criminal justice system, it's imperative to understand the stakeholders. A stakeholder, of course, is a U.S. attorney. A U.S. attorney, of course, wants to advance his or her career. That U.S. attorney someday will most likely become a defense attorney, run for office. Who knows? But I do know they want to advance their career, no different from a real estate agent that wants to list homes or a stockbroker that wants to trade stocks and generate commissions. They all have an agenda. It is essential for you as a potential defendant to understand their objective and how they're going to continue to make statements like this in the press to both embarrass you, but also to show the public how they're protecting the community. But it's also done in part to advance their career. With that said, let's go back to the beginning. Now that we understand the stakeholders and the resources the government is going to pour into payroll protection fraud, let's go through some details, because so many people are going to prison for this, and it's not the large, massive amounts that you would think. I'm not saying $10,000 or $20,000 is not a lot of money. It is. But in the white collar crime world, where we see $5, $10, $50, $100 million, $100 million losses, you typically wouldn't see someone who embezzled $10,000 or $20,000 as a bookkeeper go to prison, probably get probation, very low on the sentencing guidelines. But based on what I just read from this U.S. attorney that is making this a priority, you're seeing people go to prison for just $10,000 and $20,000. Even if the money's paid back, it's the old adage that if you rob a bank and return the money, you've still robbed a bank. Before we get into that, thank you again for watching our channel at Prison Professors. Please like and subscribe if you're listening to our podcast. Again, we're very grateful as we seek to help you better understand PPP. That was tough to say. PPP, loan fraud investigations. As soon as the government rolled out the PPP loan program in May 2020, federal law enforcement began allegations of fraud. These investigations involved, among other things, fraud in the PPP loan application process, disbursements of loans to non-qualified individuals, misuse of proceeds from PPP loans designed to cover payroll and other business expenses. As we dive into this may be a little longer video, but that's okay. If you're engaged, you'll watch and hopefully learn. As we dive into how so many people got into trouble, you have to understand it's the seizing of a criminal activity. We discuss this a lot through our work at Prison Professors. Those who have ended up on the wrong side of prison boundaries felt some pressure, might have rationalized that pressure, but it was the seizing of an opportunity. A number of people immersed in a government investigation for payroll protection fraud had never had any trouble before. But suddenly business is slowing, businesses are locked down, they can't hit payroll, and they say, wow, this is an opportunity. What can I do or say to get more? And then they may rationalize, well, the government shouldn't have locked down my business. This is unfortunate. I'm in a state that is just too politically crazy where they're putting me out of business and I cannot sustain myself. So I'm going to say and do something that enables me to right this wrong. These are some of the rationalizations, but it all starts with an opportunity, regardless of the crime. In this case, it was this submission of an application to get money, in part due to COVID, and a number of people just saw this opportunity and flat out lied. We're going to continue to see many of these PPP loan fraud cases for quite some time. I mean, there's a backlog of how many of these cases they're investigating. But the unfortunate reality for people who engaged in this sort of conduct is it may be 3 years before they show up at your front door. You may have gotten this loan, you may have spent the money, some for good intent, others for living lavishly, as the U.S. attorney said. You may think, oh, it's $50,000, $100,000, $200,000. That's what the government wastes every minute, every second. That's bubkas. That's nothing. Yet 2, 3, 4 years later, the government shows up at your front door, and it's like, wow, the whole process begins. Also, people who receive PPP loans over the last 18 months can apply for PPP loan forgiveness, which means their original loan application will trigger potentially new audits and detailed examination. They're just not going to forgive the money because they like you. You've got to follow a process that's going to be checked off, and it's got to be done the right way. As much as we would like to think we've earned the right for government to hand us money, no. There is a pandemic. It has to have been received under the right auspices, and it's got to be tracked and documented properly, the right accounting, or they're going to come and punish you. Let's talk about some of the outcomes that have been that are happening by people who are engaged in PPP loan fraud cases. As you would expect, the majority of people immersed in this investigation are pleading guilty. Facts are a stubborn thing, and the majority of the time, the people acknowledge they misrepresented, they lied. At times, they mentioned they were coerced into submitting this application by an accountant or a lawyer who might have then got a percentage of the proceeds that came in. All of these machinations take place every single day, but at the end of the day, if you did wrong, you did wrong. It doesn't matter what other people did. So the majority of people are pleading guilty. As I mentioned earlier, we've got this question. I actually saw it on Quora as well, where we produce some content. There was a question like, can you really go to prison for $20,000? It doesn't seem like a good use of taxpayer resources. If you go to prison for $20,000 and it costs $38,000 a year to warehouse you in prison, that doesn't seem like a good cost benefit analysis for the government. Well, no. The reason they do that, of course, is because they want to make an example out of you. They want other people to know what happens if you cheat for what some would call a measly $20,000. Who would purposely flush their life down the toilet for $20,000? To the question of how long do you go to jail for $20,000, the answer is it depends on myriad factors. It could depend on certainly the judge. It can depend on the mitigation efforts of the defendant. Are you remorseful? Are you ashamed? Do you acknowledge it? Do you blame? What did you actually do with the money? Did you pay the money back? These are all mitigating factors. You can have a lawyer articulate why you're worthy of leniency and you didn't mean to do it and there were pressures due to the pandemic. All true. In our experience, judges value hearing that from the defendant investing the time and articulating all of the mitigating factors that could warrant why $20,000 PPP fraud could amount to probation, a year of home confinement, or maybe 2 years in federal prison. Let's transition to a little bit of the data, as you would expect. And to be clear, we've not done an exhaustive review of every sentence that's come out for PPP fraud. We just know that there have been a number of them, as you would possibly imagine. Let's talk about statutes for people that can get into trouble. For example, PPP loan fraud statutes could include bank fraud, punishable up to 30 years in prison. Money laundering. Some people may obtain this money illegally and then launder the money to try to clean it. 20 years for every violation. Wire fraud, mail fraud, 20 years. Making false statements to the SBA, Small Business Administration, or financial institution. We've actually had some calls from defendants who they got into trouble. They got indicted for making false statements. They're questioned by a government official. That they don't speak openly and honestly to counsel, their lawyer. They then lie to the government, and the government says, you can't lie to a government agency. You go to prison for that. In one case, one executive only got, I think it was 120 days in prison, but it's really derailed his career. Aggravated identity theft. There have been people who have been stealing identity of other people to then supply and get these loans. Before you know it, it's a whole problem. Although the $1 million PPP loans steal the headlines, prosecutors, as I mentioned, are targeting fraudulent PPP loans of all amounts. They have not formally said they would not prosecute or seek prison time where the PPP loan fraud is below a specific number. Anecdotally, there are reports of raids and arrests in fraud cases of $10, $15, and $20,000. For people whose cases involve smaller loan amounts, the problem remains that prosecutors and sentencing judges often want to make an example out of anyone who participated in that. I mentioned that just a few minutes ago. Further, as an FBI official remarked in one recent case, prison sentences for PPP loan fraud should serve notice that the FBI and our federal partners will investigate anyone who misdirects federal emergency assistance earmarked for businesses who need it to stay afloat. We won't tolerate anyone driven by greed to pocket American taxpayer money that should be going to those who need it. Let's go specifically into a judge's approach to a PPP loan fraud sentencing, and we're going to rely on a case of Ganelle Tubbs, a woman who pled guilty to PPP loan fraud of $2 million, a lot of money. The judge gave Ms. Tubbs a sentence of 41 months in prison. Judge Brian Miller's comments at the sentencing hearing provide insight into how a judge might think about the unique or mitigating circumstances of a PPP loan fraud defendant. Judge Miller admitted that it was difficult to decide on the sentence for Ms. Tubbs, which carried up to 30 years in prison and $1 million fine. Tubbs came close to $2 million in PPP loans for businesses that did not qualify. Tubbs used the loan proceeds to pay off debts, student loans, and purchase many goods and services. Judge Miller noted that the government was able to find the fraud quickly and recovered all but $14,000 of the loan money. Still, he cannot give Tubbs a complete pass for this. Should Ms. Tubbs get the benefit of the fact that the government figured it out quickly? Judge Miller asked aloud, questioning why the bank gave Tubbs the loans with little to no documentation. On the other side of that equation, she walked in and defrauded them. It was a bad fraud, but she actually went in there and did it. Tubbs' lack of criminal history had an impact on the judge. It's not like she is somebody who has been running around robbing people for the last 10 years. 3 years in prison is like 20 years for some other people. Some people can go to prison and knock out those years like it's nothing. For someone like Ms. Tubbs, it is really a harsh environment. Based on what we're reading, kind of a favorable judge, I would think, speaking to the opportunity aspect of it, acknowledging that she didn't have a prior career of crime, and probably without this opportunity to get the loans, she would not have done it. Further, the bank didn't quite have their checks and balances and due diligence in place. So clearly there was some culpability there, leading to a shorter sentence. The lion's share of the money was recovered. She accepted responsibility, and I presume she did some mitigation through her own efforts to demonstrate her remorse and shame and why she would never return. That can be by way of the personal narrative, community service work, character reference letters, while important, not nearly as important as the narrative or community service work, just really working to demonstrate why she's ashamed and sorry. Good mitigation will also express that it's not just imprisonment is the great consequence. People presume prison's the only consequence, as I just said. It is not. There's the reputational fallout, career, yes, losing your liberty, financial devastation, getting fired from banks, to depression. Unfortunately, some people traversing this process commit suicide. It's very difficult going through a government investigation, and the only consequence is not prison, though I think the government tends to think the greatest consequence is prison. In many cases, it's a relief once you get there, because at least you're getting credit for some time served. I think the takeaway from the Tubbs case is how federal judges can depart and the varying degree of these sentences. And like any other case, whether it's mortgage fraud, PPP fraud, securities fraud, wire fraud, money laundering, to the extent that a defendant can mitigate and take the initiative. Too many defendants outsource to the lawyers, say, I'm sorry, and the judge said, you're sorry only because you got caught. Or they say nothing and they rely on their lawyer to do all of the work. Only the defendant can invest that time to demonstrate the real level of contrition, get into the details of life. Frankly, some facts that you might think are superfluous, unnecessary to share. And we've heard that over the years from some defendants and lawyers who will say, why are we writing about our client's first job when he was 11 years old? And then ironically, at the sentencing 2 months later, the judge will comment on something the client did at 11 years old. We're not writing things to waste time. We're all busy. We're not seeking to create work. If it's in there, it's because we believe, the client believes it's worthy of mitigation. It's worthy of sharing with a very cynical federal judge. Judges want to know how hard a defendant worked. Think of a federal judge, how hard they've worked. Probably got pretty good grades in grade school, probably did pretty well in high school to get into a good college, tested pretty well. Good Lord, they're appointed by a federal president, approved by the Senate. Kind of a big deal, right? So they're really sharp. They've worked hard throughout their whole life. Could you then deduce that they're going to probably be more lenient on someone who has also worked hard, demonstrated their work ethic over a lifetime? Or do you think they got to being a federal judge by outsourcing all of the work to somebody else? Doesn't make any sense. Why should you not work as hard or behave, or why should you be any different than a federal judge in your work ethic and what you're demonstrating to do? You shouldn't, but it's stunning how many defendants actually do. Well, I'm not going to put every name up here. I just mentioned Miss Tubbs from Arkansas. She got a sentence of 41 months, but you begin to see the disparity of sentencing, right? Here's a $200,000 loan amount for 51 months, 6.6 million, only 12 months. Wow, there's probably some mitigating details here that 6 million leads to 12 months and 200,000 leads to 51 months. Wow, there's a lot taking place here. It all comes down to mitigation, the facts of the case. Of course, some of these defendants could cooperate. There was an accountant I know who brought a number of his clients, unfortunately, into this scheme. They got to him first. He then rolled over, as they say in prison, on a lot of his clients. So he's going to get what's called a coveted 5K1 letter, a cooperation agreement with the government. That can include why someone with 6.6 million in loss amount could only get 12 months. And certainly we're seeing some very big numbers, 6 years and 7 years and everything, everything you can imagine. As I wrap up this video, you'll see that 2/3 of PPP loans were for $50,000 or less. And as we close, the argument for little to no prison time, where the PPP loan amount is 10 to 20, is not new and relies on the loss amount. One of the most important and determinative factors at sentencing and fraud cases will be the loss amount. The sentencing guidelines, which all of you need to know if you're a federal defendant, works on a sliding scale and will generally recommend longer sentences for more significant loan fraud amounts. As such, in cases where the intended loss or PPP loan fraud is only 10 or 20,000, counsel would ask the court to sentence the defendant to probation with no prison time. Regardless of the intended loss in the PPP loan case, people must consult their own lawyer and go through that whole process. So let me wrap up, which is a 16, 17-minute video. Here's how I'll close. The majority of people who have gotten into trouble for payroll protection fraud and did not have bad intentions, yet they saw this opportunity to get this loan. They needed the money, they rationalized, and in so doing, they took advantage of the system. Others, it was just outright fraud. They had no business. They had no employees. They created fake LLCs, exaggerated paperwork to try to show that they had, $1 million in payroll or $2 million. It's stealing and fraud, no different essentially than going in to rob a bank without a gun as the weapon. The weapon in this case was their hand or a pen, filling out applications they knew to be fraudulent. So you will continue to see sentences vary in part based on the motives of the defendant. Some got the money with good intentions, might have misappropriated some. Others got it fully with the intention to steal and put it into their own pocket. The motives behind why people did what they did factors heavily to a sentencing judge. That's actually a good video I should touch on elsewhere. Anyway, thank you very much for watching this video on payroll protection fraud sentencings. Any question, feel free to reach out to our team at prisonprofessors.com, where we have myriad free resources to help you prepare. While there, I encourage you to download a copy of Earning Freedom, written by my business partner, Michael Santos, that will share with you strategies and ideas that helped him traverse his 26-year odyssey through federal prison. Thank you. Please return soon. Bye-bye.